Dividend yield is an important but misunderstood component of total return. A lot of people chase really high dividend yields that ultimately end up hurting their future returns. Other investors chase high growth stocks with low yields, and that also hurts your future total return. So what is the sweet spot that will maximize your total future returns while minimizing your risk? That's what we're going to be talking about in today's video. So first, we're going to start with a quick overview of what is dividend yield. Then we're going to look at high dividend yield stocks and the historical research behind those. Do those lead to high returns, or is it more a function of high risk that you should be avoiding? Then we'll look at which dividend yield decile produced 8,000% returns from 1980 to 2006. And then we're going to look at the 8 notable stocks that are currently in the S&P 500 and also within that sweet spot of dividend yield. And then I'm going to tell you at the end of this video how you can get the entire list of the 79 stocks currently in the dividend yield sweet spot. Really quickly, what is dividend yield? Dividend yield is just simply the dividend that the company pays, either what they have paid over the last 12 months, or in this case, what I'm going to look at is what analysts expect they will pay over the next 12 months. And then that is simply divided by price to equal a percentage. So essentially, this is if you bought this company at today's price, how much percentage return would you get from the dividend alone over the next 12 months. So this is obviously an important part of total return. So this is one of the ways that you can make money with the stock. You can either collect a dividend payment or you can have your shares appreciate in value. So this is one of the two ways to make money in stocks. So high yield, does it equal high returns or high risk? Here's a study from Societe Generale showing the starting dividend yield compared to the realized yield. So here we have in blue the starting dividend yield being less than 4%. The actual realized yield for those investments was a little bit over 4%. So this is indicative of future dividend growth, dividend increases. You can see as we increase the starting yield, the actual realized yield starts to go down a little bit. So here we see there's a small gap between the starting yield in blue and the realized yield in gold. So that just signals that a part of this basket of stocks cut their dividend. And you can see that as the yield gets higher and higher, the gap also gets larger the higher we go out here. And you can see here that at this extreme 15 to 20% starting yield, the actual realized yield was right about 5%. What this simply means is that you can't take dividend yield at face value, so the dividend yield you're quoted may not be the actual dividend that you get paid. The stock market is very good at anticipating deterioration in company fundamentals. So a company with a 15% dividend yield is extremely likely to cut that dividend over the next year. So you're very unlikely to actually receive 15% dividend payout on that particular stock. This chart is the same thing, just expressed in a little bit more of a visual form through time. So here we've got in red the estimated yield or the starting yield. So you can see here that this goes up and down through time. And then we've got the realized yield here in blue. And what's interesting is that these are actually very much inversely correlated. In other words, when one goes up, the other one generally goes down. So you can see that the highest dividend yield of this entire period was here in 07-08. That was also the lowest realized yield. So this was a period of obviously very high financial stress for a lot of companies, which resulted in low stock prices, high dividend yields that were ultimately unsustainable. This is a study by Ausbil, which is an Australian investment research company. They measured volatility by different dividend yield deciles. So what they simply did was take the FTSE All-World Index, split it up into 10 different buckets, ranked from highest to lowest yields. So the highest yielders went in this bucket number 1, the next highest yielders went in the bucket number 2, and so on and so forth. So this is the highest dividend yield bucket, the top 10% dividend yield at that particular time. And you can see that these bars represent volatility over different periods. So the blue one is from 1995 to 2019, the red is the last 10 years, and the gray is the last 5 years. So what's notable is that the highest volatility, which is often used as a proxy for risk, was in these high dividend yield stocks. The next highest volatility was actually the 10th decile, or the lowest dividend yield stocks. The third highest was the 9th decile. So you can see here that this curve actually does a bit of a U-shape. So a lot of this middle ground has been historically where you've had the least amount of stock price volatility. Now we're going to look at the performance of different dividend yields over time. So Professor French did some research looking back to 1927 to 2013. And this is actually Kenneth French from Dartmouth that did this research. And he found the sweet spot of dividend yield was not the highest 20%, but the next 20%. So if you broke the S&P 500 into buckets of 100 stocks, the top 100 yielding stocks would be this top 20%. The second tier, so from 101 to 200 in ranking, that is this dividend yield sweet spot. And he found that these stocks returned nearly 14% per year over this entire period, which was quite a bit higher than both of the other segments. So the lower 60th percentile of dividend yield, the lower yielders, and the top yielders, neither one of those buckets performed as well. So there was kind of a sweet spot in that ranking of 101 to 200. Credit Suisse did some analysis that basically confirmed Professor French's findings. So they found that decile number 8, so now it's reversed. So decile 8 being the basically third highest decile if you rank it according to yield. That was the best performing decile, even better than the two highest yielding deciles. And then also Credit Suisse, note here that the lower deciles underperform the S&P 500. So dividend yield does seem to have some predictive power about future returns. However, there is quite a bit of a drop-off from some of that middle, higher quality yielding stocks to both the lower yields and the extremely high yields. These are 8 stocks that I just thought were interesting. I'm not endorsing these. I've not done any additional research into these. They were just some names that stood out to me. So what I did was simply look at the S&P 500, and I broke it down, filtered out all the non-dividend payers, and then I looked at basically split them into 5 different buckets. So I left out the first bucket, so the highest yield bucket, and I just looked at the stocks that were in that second bucket, which is the sweet spot, as Professor French noted. So in this sweet spot, we have Verizon at a 4.29% dividend yield. Pfizer was next at close to a 4% yield. 3M at a 3.76. JP Morgan Chase was also interesting at a 3.7. Coca-Cola, classic dividend holding that I know a lot of you own, at a 3.5. Paychex at a 3.43. VF Corp right there at 3.42. And Qualcomm at a 3.07. And again, these were not chosen based upon me recommending them to you. They just were some notable names within that list. If you want to get the entire list of all 79 stocks that were in that sweet spot bucket, just leave a comment below and let me know. I'd be happy to send that to you. And I just wanted to know I will not send these after June 30th of this year, just because I don't want to send you stale data. Again, this is not a recommended buy list. It's just some interesting research. There might be some good dividend stock ideas in here for you. So again, leave a comment. Let me know how you want me to send that to you, and I'd be happy to get that list out.